You spent hours backtesting, fine-tuning indicators and building what you think is a rock-solid trading strategy. But when you go live, boom, it all falls apart. What went wrong? It's not just about strategy, it's about execution. Let's break it down. Let's define strategy versus execution. The strategy, the what. It's your overall game plan, entry and exit rules, risk management, asset selection. Think of it like a game plan or a playbook. The execution, the how. It's what happens when the game is live. Slippage, order types, speed of execution. Even the best strategy can fail with poor execution. What are some common pitfalls for execution? Overfitting and backtesting. Your strategy looks great on past data, but collapses in live trading. This is quite common. Traders put a lot of time and effort into an idea that looks great outside of a live market, only to see it fall apart when live conditions such as positions in queue, real risk, and emotions come into play. Ignoring market conditions. What worked in a trending market might fail in a choppy one. It is important to constantly review not just your strategy, but your execution as well. Do the current market conditions align with your strategy, or are you attempting to execute swing trading strategies in a market that is continually reversing to a mean? Execution delays. Manual execution can be slow. Even automated systems face latency. It's likely happened to everyone. The setup your strategy calls for is aligning, and you go to put your order in only to miss that entry by a few ticks. If you're a short-term trader, this can make a lot of a difference. Personally, I like to set alerts and notifications for when prices are reaching certain levels to stay on top of the markets. Slippage and order types. Market orders can cause slippage. Limit orders may not get filled. If your strategy calls for fast reactions, you can utilize market orders to initiate positions. However, this may lead to slippage on the fill price. On the other hand, your limit order may not get filled, leading to missed trades and missed opportunities, or even chasing the market. Remember to factor these conditions in as much as possible when testing a strategy. Psychological interference. Fear and greed can lead traders to deviate from their plan. Having a good trading strategy is one thing, but when you go to bring the strategy to life in a live market, emotions get mixed in. Even for traders who have developed automated trading strategies, if the performance is not what they hoped for, they may begin interfering, tweaking stops, targets, and sizes only to completely overhaul their own plans. This is where strong discipline and the ability to let go of attachment comes into play. Let the strategy work and keep risk in check. How do you work on improving execution? First, you can test strategies in live or simulated markets. If you're testing in sim, I would suggest making the conditions as close to live as possible. Try to get a feel for what it would be like if this was real money on the table. If you are testing live, it would be good to start on a smaller product to get a proof of concept. The CME offers a multitude of micro contracts that could be utilized for this. Second, adapting to different market conditions. Backtesting and implementing a strategy is not like setting a boat out to sea with no captain. You need to constantly monitor market conditions and how well you are executing your strategy in order to determine if that's the strategy that is not viable, or if it's the execution that is falling short. Finally, keeping emotions and risk in check. If your strategy calls for a certain level of risk per trade, you've invalidated the strategy by executing poorly and taking more risk than called for. Conversely, if your strategy is calling for set targets and you're becoming greedy trying to get those extra few points, only to have the market turn around on you, you've invalidated the thought out strategy with poor execution. It's important to remember the market will be here tomorrow and to ensure you are properly funded to take ebbs and flows that can come with profits and losses. A solid strategy is important, but execution can be what makes or breaks a trader. If you can combine both with solid discipline, you will hopefully find trading less stressful and start to see the fruits of your labor. Thanks for watching. If you've enjoyed this video, give it a like and be sure to subscribe to stay up to date on the latest EdgeShorts. Happy trading.